invested in 204 Harrison earlier this year. The land was purchased. It was already an approved project for 12 units. We went right at it. Our developer went in immediately, obtained a construction loan, started construction. Here we are 8 months later, building is finished. This particular deal was a little different where we had an investor come in, but they didn't want to stay in to hold the project after completion. So we have a buyout agreement with them. Investor came in, roughly invested about $600,000-$700,000, and they should see a buyout with about a 50% return by the end of the year. This project is going to be worth anywhere from $4.5 to $5 million, and with the equity investment as well as the debt, the all-in is about $2.5 million. Most of the smaller ones, the reason they look higher returns is because of the time. So the bigger projects take a little bit longer to finish. So you're looking at, a year and a half to 2.5, maybe even 3 years to complete and then refi out. On the smaller ones, the build is much easier. So you're seeing 8 to 12 months exits from approval. It also really depends on the approval cycle. So sometimes you're gonna have approvals that come in within a month or 2 or 3. Other times it could take a lot longer, and you might have revisions and things like that happen. The bigger projects also require more equity than the smaller ones in terms of, you got to lay out more money on the construction side of things as well. So the smaller ones are quicker. ROI is similar if you look at it year over year. Obviously the bigger ones, a lot of the investors like because they're trophy buildings, or they feel that over time they would appreciate more than an 8 or 12 or a 15 unit building. So they're more in demand as well. They have more amenities. So it's a different type of product, but at the end of the day, all of them, we try and get an annualized return of over 20% on mostly all of our syndications that we do.